This show is part of One Place, a daily network of focused briefings across the stories people follow most.
Welcome to the program. I'm here with the latest on global markets, shifting workplace trends, and the energy crisis. We have a lot to cover today, so let's get right into it.
Oil prices tumble as Trump pauses strikes on Iran.
Rachel Reeves prepares the UK's response to energy costs.
Brent crude climbs back over $100 today.
White-collar workers are accepting massive pay cuts lately.
OpenAI hires a Meta executive to lead advertising efforts.
Stock markets swing wildly following Trump's latest rhetoric shift.
Downing Street welcomes the postponement of U.S. airstrikes.
Electricians find a safe haven from artificial intelligence threats.
Amazon and Lidl will soon sell plug-in solar panels.
Botox parties are becoming the new corporate networking event.
First, the oil markets.
Global oil prices have seen a dramatic shift after President Donald Trump announced a 5-day pause on strikes against Iranian energy and power infrastructure. Brent crude, which had been climbing toward $114 a barrel, plummeted by as much as 10%, eventually settling around $104. This move came via a post on Truth Social, where Trump mentioned that productive talks were underway to end the conflict. Financial markets reacted instantly, with the FTSE 100 recovering from a massive 250-point drop to end nearly flat. It shows just how sensitive the global economy is right now to any news regarding the Strait of Hormuz and energy security.
The volatility is staggering, but analysts like Chris Beauchamp from IG are warning that big questions remain. Even with the pause, the Strait of Hormuz is still closed, and the physical damage to energy infrastructure hasn't been repaired. There is also uncertainty about whether airstrikes on non-energy targets will continue during this 5-day window. Prime Minister Keir Starmer is holding an emergency COBRA meeting to discuss the situation, especially after his call with Trump, where both agreed that reopening the shipping route is essential for global stability. While the markets rallied on the hope of a resolution, the fact that oil stayed above $100 suggests that investors are still very skeptical about a long-term peace.
Now to the UK.
Chancellor Rachel Reeves is set to address Parliament today regarding the government's economic response to the Iran war. The situation is reminiscent of the energy crisis following the invasion of Ukraine in 2022, but the financial landscape has changed. Back then, the government spent £40 billion to support households, but Reeves has signaled that she simply doesn't have that kind of money available now. Her statement is expected to focus on 3 main pillars: giving the Competition and Markets Authority more power to stop profiteering by oil companies, accelerating the push for new nuclear power, and outlining principles for targeted support for families. The goal is to prevent a colossal economic crisis that could last for decades.
Energy Minister Michael Shanks has also been out this morning trying to calm the public about potential fuel shortages. He emphasized that there is currently no shortage of fuel in the country and urged drivers to go about their business as normal. The government is monitoring the numbers daily, and both the RAC and AA have backed the message that panic buying is unnecessary. However, the real concern lies in the long-term price cap, which expires at the end of June. Reeves is expected to endorse Keir Starmer's hint that any future support will be targeted toward the most vulnerable rather than being universal. It is a delicate balancing act between fiscal responsibility and protecting citizens from soaring costs.
Next, the market's reaction.
The initial optimism from Trump's announcement seems to be fading quickly this morning. Brent crude has already climbed back above the $100 mark, rising about 2.5% to over $102. This reversal comes as Iranian officials dismiss Trump's claims of productive talks as psychological operations and fake news. The Islamic Revolutionary Guards Corps stated that these comments had no impact on their operations, while the parliamentary speaker suggested the news was manufactured just to manipulate the oil markets. This conflicting narrative has left investors on edge, as the underlying situation in the Middle East remains incredibly fragile. The roller coaster ride for global equities continues as the reality of the conflict sets back in.
Market analysts are pointing out that while Trump's rhetoric diffused some immediate tension, fresh reports of strikes on energy buildings in the Isfahan region have already caused prices to bounce. There is a sense that these strikes might be a tactic to force Iran's leadership to the negotiating table before a revised Friday deadline. That deadline is particularly significant because it coincides with the arrival of over 2,000 U.S. Marines and several naval vessels in the Gulf region. While Asian markets saw some recovery, European markets are expected to open lower as the dust settles. We are also waiting on new purchasing managers' surveys, which will likely show the true impact of these energy price surges on the global economy.
Moving to the workforce.
The white-collar job market is revealing a painful trend where landing a job doesn't always mean success. A recent analysis by Revelio Labs found that 40% of professionals who changed jobs at the end of last year took a salary cut of more than 10%. This is the highest share of pay cuts seen in at least a decade. We're hearing stories like Scott's, who applied to 1,600 jobs and went through 78 interviews before finally accepting a role that paid half of his previous salary. He had to take a position 2 steps down from his former senior manager role just to stay afloat. It suggests that the low unemployment rate of 4.4% is masking a much deeper struggle.
This imbalance is largely due to the fact that there are fewer openings, and employers have become incredibly picky. In many cases, companies are demanding more years of experience for lower-level roles, essentially getting overqualified talent for a bargain. Long-term unemployment, defined as being out of work for 6 months or more, has nearly doubled over the last 3 years. For many workers, the search has become so grueling that it has taken a toll on their mental health, leading some to seek medical help for depression. The triumph of finally getting hired is often bittersweet because it can feel like a massive career setback. It is a sobering reminder that the labor market is much weaker for professionals than the headline numbers suggest.
Now for tech news.
OpenAI is making a major move into the advertising space by hiring Dave Dugan, a former executive from Meta. Dugan previously managed Meta's largest client and agency relationships, and his new mission is to transform ChatGPT from a simple AI tool into a full-fledged ad-supported media channel. This is the first time OpenAI has appointed a senior agency-facing executive to such a high-level leadership position. At Meta and Google, these roles were the primary link for massive ad spenders in sectors like travel and airlines. Dugan's priority will be taking ChatGPT's experimental ad features and turning them into a commercial-ready product. He has stated on LinkedIn that the goal is to do this without disrupting the core user experience that people love.
This hire is a clear signal to the industry that ChatGPT is becoming a platform that brands need to plan for. For travel brands specifically, having an executive who understands their specific needs is a huge development. It suggests that OpenAI is looking for sustainable revenue streams beyond just subscriptions. By bringing in someone with Dugan's pedigree, they are signaling to the big ad agencies that they are ready to play in the big leagues of digital marketing. The challenge will be integrating these ads in a way that feels natural within a conversational AI interface. If they succeed, it could fundamentally change how we interact with AI and how companies reach consumers. It is a pivotal moment for the company's commercial evolution.
Back to the markets.
The FTSE 100 ended a wild day in the red. Though it did manage to claw back some of its earlier losses, the volatility was driven almost entirely by President Trump's shifting rhetoric regarding Iran. After threatening to obliterate Iranian power plants if the Strait of Hormuz wasn't reopened, he suddenly announced a 5-day delay on strikes. This dramatic U-turn triggered massive gyrations in global financial markets as investors tried to price in the possibility of a resolution. Trump claimed that his administration had held productive conversations with a top Iranian official, though not the supreme leader. However, the confusion was compounded when Iranian media outlets quickly denied that any such negotiations were actually taking place, calling the claims a tactic to lower energy prices.
Market analysts are finding it increasingly difficult to navigate these sudden policy shifts. David Morrison from Trade Nation noted that while the lives at stake are the primary concern, the constant interjections from the president make trading nearly impossible. The FTSE 250 and the AIM All-Share also saw significant drops before recovering slightly toward the end of the session. Trump's strategy seems to be a mix of extreme pressure and sudden diplomatic openings, which keeps both his adversaries and the markets guessing. Even with the 5-day pause, the underlying threat remains, as the Monday night ultimatum was only delayed, not canceled. This environment of high-stakes brinkmanship is likely to keep market volatility at extreme levels for the foreseeable future, as the Friday deadline approaches.
Next, the political reaction.
Downing Street has officially welcomed the news of the strike postponement, calling the reports of productive talks a positive development. A spokesperson for Prime Minister Keir Starmer reiterated that a swift resolution to the war is in the global interest, particularly the reopening of the Strait of Hormuz. The effective blockade by Iran has sent shockwaves through the UK economy, raising fears of a massive spike in the cost of living. Starmer is chairing a COBRA meeting this afternoon with senior ministers and the Governor of the Bank of England to examine every possible lever the government can pull. They are looking at the knock-on effects of these energy prices on everything from manufacturing to household bills, trying to find ways to mitigate the damage.
The Prime Minister's focus is clearly on the domestic impact of this international crisis. He told reporters that the government is doing everything possible during this very difficult period. The presence of the Bank of England governor at the Cobra meeting suggests that monetary policy and inflation are top of mind. While the temporary drop in oil prices following Trump's announcement provided some relief, the subsequent rise back toward $106 shows that the pressure hasn't fully eased. The UK is in a vulnerable position because of its dependence on global energy markets, and the government is trying to project a sense of stability and preparedness. Reopening the strait remains the top priority for both the US and the UK to stabilize the global energy supply.
Now, a career shift.
In a world increasingly worried about AI taking over jobs, the skilled trades are emerging as a safe haven. We've been looking at the story of Carl Morosky, a licensed electrician who earns a six-figure income and has no regrets about skipping the traditional four-year degree. Carl has built a stable life for his family by combining his technical skills with a successful YouTube channel where he teaches others about the trades. He argues that the physical nature of his work, which involves everything from residential wiring to project engineering, offers a level of job security that many office roles can no longer guarantee. He's seen a surge of interest from people who were previously in outsourced or automated white-collar positions looking for a more hands-on career.
Carl's daily routine is a testament to the discipline required in the trades. He's often on the job site by 6:30 in the morning, having already spent time editing videos for his 200,000 subscribers. He reinvests all his YouTube earnings back into his channel, using his day job to support his family. His path from being a mechanic and tow truck driver to a project engineer shows that there are multiple ways to achieve success without crushing student debt. He emphasizes that the trades provide a sense of purpose by doing work that actually matters and keeps the world running. As AI continues to disrupt digital industries, the demand for skilled professionals who can physically build and maintain our infrastructure is only expected to grow.
Next, green energy news.
The UK government is doubling down on green energy in response to the soaring fossil fuel prices caused by the Iran war. One of the most interesting developments is the plan to sell plug-in solar panels at major retailers like Amazon and Lidl. These panels, which are already popular in Germany for use on balconies and fences, can be plugged directly into a home's electrical network. The goal is to allow homeowners to reduce their dependence on the grid and lower their bills almost immediately. Ministers are also mandating that all new homes be built with solar panels and heat pumps as standard. This renewed push for clean energy is seen as a vital step in protecting the country from the volatility of global oil and gas markets.
In addition to the solar initiative, the government is introducing a scheme where residents living near wind farms can get discounted bills on particularly windy days. This happens when wind turbines are normally turned off due to network constraints, so instead of wasting that energy, it will be offered to locals at a lower price. These measures could save new homeowners up to £830 a year on their energy bills. It's a significant shift that comes a decade after previous net zero building standards were scrapped. By working with manufacturers like EcoFlow, the government hopes to make renewable energy accessible to the average shopper. It's a practical response to a geopolitical crisis that has made energy security a top priority for every household.
Finally, workplace culture.
A new trend is emerging in the corporate world where Botox parties are replacing the traditional coffee break or happy hour. Spas like Plump Cosmetics are seeing a 20% increase in group bookings, often from teams in image-focused industries like real estate. These events are being treated as networking opportunities or team bonding sessions, complete with drinks and charcuterie. In some cases, managers are even footing the bill as a gesture of appreciation or to help their team maintain a certain professional appearance. It's a reflection of the broader looks-maxing culture where people are becoming much more open about the cosmetic procedures they receive. What used to be a private secret is now a social event shared with colleagues between client meetings.
The demand for these treatments is skyrocketing, with some clinics reporting nearly a 90% increase in neurotoxin sales over the last year. This boom is driven by social media influence and a growing cultural acceptance of aesthetic procedures. Even professions like nursing are seeing teams come in together between shifts to get injectables. Analysts suggest that the rise of GLP-1 drugs has also contributed to a higher demand for appearance-related treatments. As high-profile celebrities continue to be transparent about their own work, the stigma has largely vanished for the general public. For many, getting Botox with coworkers is just another way to let loose at the end of a work week while staying competitive in a market that often values a polished, youthful image.
That's our roundup for today. Thanks for joining us for this daily briefing. We'll be back tomorrow with more updates on the stories that matter most to you.